Good afternoon and welcome to your weekly FX options report. Today is Wednesday, November 10, 2010. In midweek trade, the major U.S. stock averages are trading in negative territory, down for the third straight session in a row. Now that the key event risks in the U.S., including the Fed Reserve's quantitative easing measures, midterm elections, and non-farm payrolls are out of the way, focus has shifted to global growth concerns. Now, earlier this week, European Eurozone sovereign debt concerns have resurfaced. And today, ahead of the G20 meeting, the U.S. dollar is trading on a mixed note. Now, in terms of economic data releases, U.S. initial jobless claims for the latest week declined more than expected, down by 24,000 to 435,000. The four-week average also declined to its lowest in 2 years, while continuing claims also fell. In other U.S. data releases, the trade gap narrowed to $44 billion in September. And U.S. import prices for the month of October rose by 0.9%, while exports climbed by 0.8%. And there was also economic data out from China on Wednesday. The October trade surplus rose more than expected to $27.1 billion. Meanwhile, China's central bank also raised its reserve requirement ratio by an additional 0.5%, and this will begin to take effect in November. And in the foreign exchange market, the U.S. dollar is trading lower against the British pound. Now, this does follow the Bank of England's latest quarterly inflation report. The UK pound has strengthened as that report was less dovish than expected, and the BOE does forecast stronger GDP and raised its inflation forecast. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And now in our daily trend opinion, we'll take a look at the individual IC FX option pair, starting out with the AUX. Now, that is the U.S. currency against the Australian dollar. For that pair, the key short-term resistance comes in at 107.25. The RSI is mixed with a bearish bias, and the preference of trading central analysts is short positions below 107.25 with targets at 97.15 and 93.50 in extension. And for the BPX, the U.S. currency against the British pound, that is capped by a negative trend line. Now, that pair is capped by a medium-term declining trend line, and the RSI is mixed to bearish. The preference of trading central analysts for the BPX pair is currently short positions below the pivot of 64 with targets coming in at 61 and 60 in extension. For the CDD, the U.S. currency against the Canadian dollar, the downside does prevail. Now, the RSI is capped by a bearish trend line, and therefore the preference of trading central analysts for the CDD is short positions below 105 with targets coming in at 99.50 and 98 in extension. Moving on to the EUI, the U.S. dollar against the euro, that pair is under pressure. Now, it is pulling back on its new resistance ahead of further weakness, and the RSI is capped by a declining trend line for the EUI. Therefore, the preference of trading central analysts for the EUI is short positions below 73 with targets at 70.50 and 68.40 in extension. The SFC is the U.S. currency against the Swiss franc, and that pair is also under pressure. Now, it is posting a rebound, but currently stands below its new resistance, and the preference of trading central analysts for the SFC is short positions below 100 with targets coming in at 94.25 and 92.30 in extension. And moving on to the YUK, the U.S. currency against the Japanese yen, it is capped by a declining trend line. Therefore, the preference of trading central analysts for the YUK is short positions below 83 with targets coming in at 79.30 and 76.50 in extension. And moving on to our weekly trend opinion for the major IC FX option pairs. Last week, the overall U.S. dollar trend saw gains against the major currencies, but at the same time, the bearish dollar trend does remain in place. Therefore, trading central analysts will take advantage of any pullbacks and enter new short positions. Now, in terms of portfolio performance since its inception in August of 2007, it is up by 1,987.16%. And since the beginning of this year, January 2010, it is higher by 707.06%. Now, we have two trade alerts for you here right now, and one is a recommendation to buy puts on the SKA, and another to buy calls on the NDO. Now, starting out with a look at the puts on the SKA, that pair is rebounding on its support. Also, it should strike against its medium-term bearish channel upper boundary. And moving on to the recommendation to buy calls on the NDO, the RSI is supported by a rising trend line. In addition, it is currently shaping a bullish flag. Trading central analysts will also be keeping a close eye this week on the EUI, the BPX, and the YUK. Now, next week, any kind of U.S. dollar strength will be watched for the opportunity to enter short positions against the U.S. currency. Therefore, trading central analysts will keep a close eye on the CDD, the PZO, as well as the AUX and the SFC. Now, they will be keeping a close eye on the CDD because it is currently approaching its strong support at 99.50. Also, the daily RSI for that pair remains capped by a declining trend line. And for the PZO, that pair is under pressure. It is also challenging its previous low at 121.50. And for the AUX, it is currently on the downside, posting a slight rebound. Last but not least, the SFC has struck against its strong resistance at the 100 level and does remain under pressure. It is also approaching its next support at the 95 level. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great week.